Hey, this is Nash and welcome back to Tipranks. In today's video, we're going to talk about the state of the stock market. What happened yesterday? Why did we have a little rally? And why right now everything looks redder than a communist convention? Everything right now is red and it seems that the market is pulling back. So basically, what happened, why it happened, and what's coming next. Stay with us. This is about to get interesting. Thank you for staying with us. My name is Tom Nash. I used to be a senior financial analyst. Now I'm strictly on YouTube giving you an accessible, simple to understand information about the state of the stock market and the economy. Right now, we're faced with one of the craziest times in history because this market doesn't resemble anything we've seen in the past couple of decades. This is absolutely bananas. So yesterday, the Fed came out and gave us a gift, a 0.75% increase in interest rates. Now, of course, as expected, the stock market reacted by rallying because the one thing that the stock market hates is uncertainty. The one thing that the stock market loves is certainty. So once the relief of the actual rate came out, the stock market went bananas and you saw the little rally. But then again, whatever happens after the time you go to bed, between the time you wake up, you have this little thought process. You're like, oh, wow. Yes, we have certainty, but this is not good. So now the market is waking up to this idea. Well, 0.75, it's good that we know this, but this is not good because the stock market is basically just a reflection of what people are thinking about where the economy is headed and when we are about to see this recession actually come to fruition. Now, look, we're not officially yet in the recession. It hasn't been announced, but look, we already had one negative quarter of GDP. We're about to have one more in just about 2 weeks. So once that happens, if you layer on top of that the fact that interest rates should go up to 3.5% by the end of the year, according to Fed Chair Powell, and on top of that, you add the fact that energy prices are going to be elevated for a while because of Russia, because of OPEC, because of lack of supply. And with that, you have a very unique situation, which is not healthy for the market, which means right now, capital just got more expensive and will keep getting more expensive as interest rates goes up, which means companies will have less access to capital, to funding, which means more companies will go under, more employees will lose their jobs. Will have less spending power, less companies will make money in the free market, which means they'll have to lay off more employees, etc., etc. On top of that, high energy prices is driving high inflation, which is also cutting into the margins of the same companies, which means that these companies will also have to lay off employees to deal with the decrease in their margins, which means less people now have less money to spend, which starts a vicious cycle, putting the economy into what I think is a hard landing. It's very hard to sell this to the public if you're the Fed as a soft landing because essentially what you're leading up to is a complete recession. You cannot say that this is a soft landing. And I think the markets are starting to price that in. And the way I see it right now, the main driver of inflation and the main root cause of this whole thing is elevated energy prices. That's the key to everything. If we can figure out energy prices, we're probably going to avoid a massive hard landing. If we can't, it's going to be very painful. Now, the problem is that right now, you have the perfect storm. Demand for energy is going up as the summer approaching and people want to travel and actually have fun. And then we have the winter, heating, etc., right? On the other hand, this industry suffers from underinvestment. And underinvestment means less production. It's underinvested because of pandemic. Nobody invested money in it when it was negative prices, right? It's underinvested because of policies and regulators basically encouraging people to not invest in oil. So basically what you have right now is a situation where oil prices and energy prices in general are driving this inflation. And if you can tackle that, you probably have a better shot at getting a soft landing. The problem is that the markets are not stupid. They realize how low of a percentage that scenario is. Because for that to happen, you have to solve some structural issues. For example, we've underinvested in oil capacity for a long time because of ESG policies, because of the pandemic. Now we have Russia not selling oil to us because of the situation in Ukraine. This war is horrible and Russia should be punished, but sanctioning oil is pretty much punishing ourselves. I don't know if that was the best solution to punish Russia, although I do agree that they should have punished for sure. But right now it seems like Russia is still selling oil to India and China, but we don't have oil and we're being punished for that. So that's kind of weird to me. But it doesn't seem like the war is coming to an end and the Russia-Ukraine situation just seems to get worse and murkier. And on top of that, you got the US oil companies like Chevron saying we can't invest in any supply right now because the US government is not giving us any certainty. Even if they do invest now, it's a 3-year process until you actually see a ramp up. So where is this extra oil going to come from? It's hard to see where from. And honestly, I don't know where the extra supply of oil can come from. I can't see it. So the only option you have left, if you can't supply more oil, is to destroy demand. The only way to do that is push the economy into recession, a planned recession to slow things down. Unfortunately, the markets are seeing it that way for sure, because you can see it in the price action right now. And if that's the case, everybody will suffer. There's not going to be anywhere to hide. Crypto, equities, bonds, real estate, everything is going to take a hit if that's indeed the case. That's just me telling you things how they are. Unfortunately, and again, sorry to tell you that, but when you go on TV, you don't get that explanation. You're getting some BS Disney fairy tale explanation of how everything is going to be peachy once they raise interest rates to 3.5%, which is not going to be the case. So I'm just here to tell you the way it is, to level the playing fields, give you the actual information without the normal BS in mainstream media. Now, let us know below if you agree with our analysis, if you disagree. These are, of course, just my own personal opinions. It has nothing to do with Tipranks. It might be inaccurate, might be wrong. These might be the ramblings of a madman. It's just me with my crazy theories. Now, you do your research. Let us know in the comments below what you think about this. Are we headed to recession? What's the future of the stock market? Are you guys buying the dip? Are you going all cash? I'm really fascinated to hear what your strategy is. Comment below. I'm going to interact with every single comment just to find out what you guys are doing in this crazy ass economy, this crazy stock market. Let us know below. We'll see you in the next video.